Welcome back to RealPage Economy Express. It's been another eventful week, not because of what's happening, but because of what's not. Now that the federal government enters its third week of shutdown, most major data releases are on hold. So today, we will focus on the few reports still available. Let's start with jobs. The ADP report showed private employers cutting 32,000 positions in September, the sharpest drop so far this year. Small businesses took the hardest hit, losing about 40,000 jobs, while mid-sized firms were down 20,000. Larger companies offset a bit of that with a gain of 33,000. Altogether, the private sector has added an average of just 29,000 jobs per month this year, while unemployment has edged up to 4.3%. Economists point to tariffs, tighter immigration rules, and AI-driven restructuring as key reasons hiring has cooled. Consumers are turning more cautious too. In August, consumer credit barely moved, up just 0.1% after July's stronger 4.3% pace. Now, revolving credit, mostly credit cards, fell 5.5%, while non-revolving debt like car and student loans rose 2%. Now, auto sales held up as buyers rushed to beat the October 1st EV tax credit deadline. Spending, adjusted for inflation, still grew 40 basis points, but mostly among higher income households. At the same time, student loan delinquencies jumped to 10.2%, showing growing stress among younger borrowers. The consumer sentiment held steady, but remains subdued. The University of Michigan's early October reading came in at 55, essentially unchanged from September. Now, respondents cited high prices and weakening job prospects even as the shutdown continues. Inflation expectations eased slightly to 4.6% for the next year, while long-term expectations held at 3.7%. In housing, mortgage activity cooled. MBA applications declined 1.8% in mid-October, purchase loans fell 3%, while refinances slipped 1%, but stayed nearly 60% above year-ago levels. The 30-year fixed rate averaged 6.42%. On the broader economy, growth expectations actually improved. Participants in the latest National Association for Business Economics survey now expect GDP to expand 1.8% this year, up from 1.3% back in June. The Atlanta Fed's GDP Now model shows third quarter growth tracking close to 3.8%, driven by capital spending on AI data centers and a sharp drop in imports. And finally, the Fed. Speaking at the 67th annual meeting of NABE last week, Chair Jerome Powell said the central bank is nearing the end of the balance sheet runoff and hinted that more rate cuts remain on the table as the job market softens. With the funds rate now at 4% to 4.25%, he called the balance between fighting inflation and protecting jobs increasingly delicate. That's all for now. Even with limited data, the message is clear. Growth is holding, but the labor market and consumer momentum are losing steam. We'll see you next time on RealPage Economy Express.